Today is April 19, 4:49 p.m. and market is closed, but we wanted to go over these unusual options we saw on Amazon. It had rallied 2% today. However, we saw unusual options that were telling us a different story, and so that's why we also made a different trade to follow this sentiment on these unusual options. So I'll go over that later in the video. First off, keep in mind earnings is coming up. This is on April 27th, so these unusual options could be an earnings prediction. Okay, so without further ado, let's take a look at those unusual options. Here we are. Today, you'll see at 11:38 a.m., you'll see these 10,500 contracts for the May 19th, all on the 105 puts and the 105 calls. And not only is it 10,000, if you start to scroll down a little bit more, you'll notice at 11:19 also another 3,000 contracts you'll see here, right? And so that's more than 10,000. That's 13,500, right? And so what they're doing is they're selling the 105 calls and then buying the 105 puts, right? And by selling these calls, keep in mind it requires some buying power, right? And we calculated this a little earlier that this requires about 2,400 buying power. If you're not sure how to figure out buying power when you sell calls, look at that video that we made on how to calculate buying power. There's a very simple way. We'll put that link up here so you can learn how to do that. But for this was about 2,400 for selling the 105 calls. And since that was we have a total of 13,500 of them, that means there was a requirement of $32.4 million, at least this amount of capital required just to put on this trade. So this was definitely a very large institution that did this. And so if we look at the options chain here on the May 19, and we were to analyze this, you'll see here also the volume here. Notice that the volume is actually less than the open interest. Both sides less than the open interest. So we'll have to be tracking this very carefully to make sure these were opening orders and not closing orders. So that's why we'll be following this for a few days, and make sure you are subscribed and you hit the bell icon so you'll be notified. If we see that they are closing orders, we will notify everyone. And so if they were opening, they bought this to open, and that's why we also have positions all around these strike prices buying this. And then they sold the 105 calls here. And so what that does is when you analyze the trade, it's actually a synthetic bearish trade. As the price of Amazon at 104 goes down on the x-axis, the profit and loss will increase, right? And so, but if it goes up, then it will go below the zero line where the profits will be a loss if it goes the other direction, right? So this is a massive short on Amazon. And so let's take a quick look at the Greeks. You'll see that that positive theta and that negative 100 delta, which is why they call it a synthetic position, because they're basically replicating 100 shares of Amazon, which gives a negative 100 delta without actually having to own those shares. But they're using options as a way for the leverage. Okay, so that's what's happening with these unusual options. And our trade was something very similar, but not using all that buying power. So we have a couple positions, but let's just take the 105 as one of the ones. And what we did was we bought the 105 puts, or the 100 or 110s, because we have multiple accounts, and they have different kind of risk profiles and different account buying powers. So, but the same idea is the fact that what we're doing is we're selling the near term, the ones right closer to the earnings, because we're going to take advantage of that higher volatility. So like for the 105s, we would sell the 100, or you could sell the 104. It depends on your risk appetite, right? As long as you're selling options when the volatility is a lot higher, you're at an advantage with that. So for example, this one, when we sold the 100s in the near term, this is a bearish diagonal trade. You'll see here it only costs 300 per contract, not the 2400 by selling that call. So you'll see here, if the price goes down, it is also going to be profitable. And you'll also see here our theta is also positive. And so that's what we like about it. It's actually a very strong high theta, so that at this price, if it doesn't go anywhere, it will still be profitable and start to increase above, because of the high volatility that we sold on the April 28th is giving us that nice positive theta decay. All right, so that's our trade idea that we have positions in, and so there's different ways of doing it in different strikes, but it's the same idea. It's a bearish diagonal trade that takes advantage of this drop in Amazon that we are anticipating based on these massive, unusual option activity. All right, so if this was helpful, please give us a like. It really helps us make more videos. And then subscribe, hit the bell icon, and you will be notified whenever we find these unusual options. Take care, everybody, and good luck with Amazon.